talking about people and country, we'll talk about another country away from India.
Bring it on.
So another country just next door, known to be beating India in every single aspect of economic development for the last 3 decades, right? Looks like that cycle is going in the reverse. We've been talking about that all-important China slowdown. The growth is not going to be the way it was over the last 2-3 decades. And here is a metric, a number that really puts how the last 2-3 decades were and how probably the next 2-3 decades is going to be. Foreign investment in China, foreign players' investment in China is down at a 25-year low. Very telling statistic, isn't it, Karthik? We'll get our good friend Amit as well into the studio. Amit, why don't you join us? Karthik.
Hi, Amit. Morning. Yeah, so
good morning.
That is one number that you mentioned,
yes.
Krishna. There are more numbers. Net exports from China are down about 14%. Net imports into China are down about 12%. We are broadly talking about a scenario where China is unable to trade with the world. China perhaps doesn't have enough orders to send out of its shores, and at the same time does not have enough demand from within its own consumers, its own population, its own citizens to be in a position to even import much. So overall, it is a bad situation for China, which is coming out or has just barely come out 7-8 months into it from the zero COVID policy, which was the most stringent lockdown across the world.
And Amit, was that the problem? Post that draconian zero COVID controls. I mean, China is already reaching the end of its peak. It looks like the draconian COVID control sort of hastened its end of its peak and its next cycle.
China is a first world economy. They are manufacturing driven.
Fair enough.
No, they are manufacturing driven. What I'm getting to is 14.5% down, small number. Imports down 12.4%, small number. FDI 25 years low, small number. FDI down to their reduced to 4.9 billion this quarter, small number. FDI is down 87% this year. That's a big number.
Wow, that is a big number. Foreign direct investment in China is down 87% this year as compared to last year.
As compared to last year. Another big number, the producer price index, what the selling prices the producers get for their goods and services has been going down for 8 straight months. Manufacturing driven economy, inflation is down to 0. That's not a good thing. Textbook definitions of depreciation. Of depression, sorry, not depreciation, depression.
Okay, textbook definition. I was, we're talking about inflation, but there's different kinds of inflation. There's stagflation, and etc. etc. You reach an economy. It's sort of the Japan syndrome, if I may. You've built your economy so big, so quickly that now there is not that you can't expect the same kind of growth in that sense. Also, Amit, all of this is not just about the overall long-term cycles of China. It's also about geopolitics, isn't it? What's been playing out in terms of geopolitics since COVID?
I think there's a little bit of what they're doing wrong with themselves also. They were the suppliers, manufacturing suppliers to the whole world.
Yes.
Now, if their exports are down 4.5%, then there is everybody has been talking about disruption in supply chains.
Right.
But 8 straight months PPI is going down. That means they are still adamant about their strict non-COVID policies. The Apple factory saw close down for some time. So they're probably too arrogant or too stubborn about sticking to what they were doing and not trying to change things is what I'm worried about. It's good for India. Some of the manufacturing will come down, but in the meantime, the disruption in the manufacturing supply chain that it has caused is going to be bad for the whole world.
Right, and Karthik, that's a fair point, isn't it? It's all good to celebrate the downfall of China being in India. It's a first world economy. You can't have a big economy turning sour, turning bad, because we're all connected in this world.
We are. So I think, Krishna, the problem really lies with the fact that when China went into zero COVID, the world did not have a choice. The world still had to consume. The world still needed those goods that were coming from China to now come from somewhere else. So the supply chains widened and they spread in other parts of the world to a point that the dependence on China got reduced for the whole world, not just India. For the whole world, the whole world was able to find suppliers outside of China because China's factories were all in lockdown. There was this syndrome of ghost factories. There was this syndrome where Chinese, in fact, there was this surge of grandparents in China, not the numbers, but the discovery of grandparents, because families had moved back to their villages, the native villages, and grandparents had seen grandchildren for the very first time, because China up until then was such a busy economy that there was no time for any family time per se. So, so all of that happened at a time when the world, in any case, needed certain goods to arrive at their doorsteps. And those goods arrived from places outside of China. So now that there is no dependence on China in the overall global economic environment that we find ourselves in, we have reached a point that that why should we deal with the arrogance of China? And for the Western world, the proximity and the sort of, association China and Russia enjoy is a problem for the West. What happens on our borders with China is a problem for us sitting in India. So it is this arrogance, it is this socialism, it is this proximity to Russia, and it is China wanting to make the world believe that the world cannot function minus China, is something which is going to bite China and is now starting to hurt. So we are in a situation where I think, China is likely to not see the kind of growth it has seen in the last 3 decades. And these numbers coming from China, incidentally, where China itself admitting that these numbers are low, means that the numbers could actually be a lot lower than what they are being projected as. Right.
Absolutely, couldn't agree more. Exports down, they say, is 14.5%, right? Foreign direct investment is down 87%. These are macro numbers, and let's remember, whenever we get macro numbers from China, it's the Chinese government's macro numbers.
It's the made in China numbers.
It's the made in China numbers, so to speak. And those numbers are this bad. Look at that. Exports tumbling by 14.5% in July. Imports falling by 12.4%. It's like a trade shutdown that's happening. They're neither exporting as much as they used to. They're not importing as much as they used to.
The rate cycles. What is China doing? And that is where, you've got to, despite China being an enemy, you've got to give it to their gumption. What is China doing right now? Dealing with high inflation, dealing with these very, very poor macro numbers, given its robust sort of, track record of decades. What is it doing? It's cutting interest rates. It's not hiking interest rates to tame inflation. It is cutting interest rates for manufacturing to become cheap, for credit offtake to take off, and for overall cost of capital to reduce, for China to continue gaining its competitive advantage to manufacture goods for the world. So the point is, it might lose business coming from India. It might have lost business coming from the US. What is stopping it from finding new partners that it can continue exporting to? So I think you cannot write off China just yet. China is a mammoth economy. It is a very dogged leadership which is not going to compromise on its own economic growth. So whatever it does, China is going to bounce back, whether we like it or not. China is going to bounce back. Now the point is, India needs to figure out a way to make its own market in absolute terms, not in comparative terms with China. Because when you keep comparing with China, any number that comes out of India against a slowing down China is going to look handsome. But we need those numbers to reflect in absolute glory and not in comparative glory with China.
Right. I was thinking, India's growth numbers should be better than a slowing China to start with. A slowing China has got some good numbers, overall
India
numbers.
Needs to be very focused. If we need to grow at 7.6% to become the third largest economy of the world by 2030, then our target is 7.6%. Not 5% against China's 3%.
True.
We should not find our solace, our happiness against a slowing down China.
Because if you're comparing growth,
what we need.
Because if you're comparing growth rates, we should compare inflation rates as well. They have 0% inflation. Exactly. We should have 0% inflation. We don't have 0% inflation.
But for China, 0% is a bad thing.
True.
So because they are manufacturing driven, they have a huge consumer base. For those economies, inflation is a good thing. That means that people are not buying the goods they are manufacturing. And they are not even exporting them because their exports are down. So it may be a period phase, like Karthik was mentioning, they will bounce back. But they will have to do a lot more than just cutting down rates little bit. It's like reverse the US situation in China. While US is hiking rates to control inflation, these guys need to get inflation up. And that is what is not happening right now.
All right, fair enough. Getting inflation up is the challenge for China. The world goes one way, world has one kind of problem. China goes the other way, it has other kinds of problems over there. That's what's happening over here. India, US, every country in the world wants to badly tame inflation, especially post-COVID. Post-COVID, China comes out, the last to come out of COVID, technically speaking, turns around and says, whoa, we have to hike inflation, and cut rates over here. I mean, the idiosyncrasies of global economics.